Happy Friday, everybody. It's 11/22/2019. I have a weekly Dow Jones Index Composite chart. It is a Friday. It's 11/22. Once again, what we're going to do is we're going to go back where it all started. And it started right here. And uh, we started putting bottoms in volatility. That started over here during these weekly moves, as everyone can remember so far in the calendar of 19. We go back over here and we say 1 week, 2 weeks, 3 weeks. Here's a fourth week in the weekly. And just to let you know that we had made 52-week highs, and we did. The overbought market on a weekly level is definitely here. However, the volume has been light. The short sellers that were short in October got killed when they had the breakout. And things were very, very pessimistic, as we know. Volatility is going to return right now. And it's important for the people that are watching the video is that everybody's expecting a Christmas rally and whatnot. Well, I can say at this overbought level, that Christmas rally happened in October. And now the date, as you can see right here clearly in the video, 11/22/19 Dow Jones weekly chart. That's what it is. And we can see how strong that when we hit certain dates, going back to the lower end of it here, which I really want you to see, right? And this is where it started with the short cover rally. That meant that the bears were really on top of the market, which they were, but they had every reason to be that way. So, as an expert in high frequency trading technologies and things that happen with exchange and how super machines can run prices in different directions any way that they want to. The public doesn't know that. And they don't. Anyway, let's just get back to an overbought market. Okay? We know the short sellers got squeezed. And they did. Now that the shorts have covered and we're making a weekly top on November 22nd, the real question is volume, volatility. That returns when you get at highs in markets. So now the bull volatility, meaning that bigger pullbacks would come, and then we would see if people really want to buy the market going into year 2020. That's what we need to see, is some downside volatility from the overbought extended levels across the board in all U.S. exchanges at this moment in time. However, you can continue to go sideways or melt up easily until January of 2020. A lot of questions need to be answered. Here's one of them. Are people going to sell? If they do sell, the capital gains are going to be a gain. So why not sell after the first of the year? That could easily come into this tape. So we will know that when you're making highs, and we have made a lot of highs in 2019, and at every one of them, I pointed them out. They're here on YouTube right now. You should go back and look for other times and dates and whatnot. We invite you to do that. So basically, on a Friday, it's a weekly chart. We know it. But we know that we're overbought. The overbought process had already started, and these are a weekly lag price movements, believe it or not. when you start looking at public indicators and how to use them and whatnot, or everybody in the retail world is looking at the same thing, just like you're looking at on this video. So what we're looking for is the reversal side of the volatility to create new money to buy the dip and come into the market, which would tell us a little bit more about conviction on the bull side going into January of 2020.